Hey, all Sean Maloney, Digital Business Masters. Welcome to another DBM strategy call. We do these every Monday. Okay, have done now for much of the past year because it has been one hell of a year and continues to be so. As long as you understand exactly where we are with this industry. Okay, so now is the time to be actually focused even more than ever because some very special things are happening around this industry. And you'll only really recognize that if you stay up at the highest levels of macro and geopolitical happenings. That's just the way it needs to be because you are closer and closer to the money supply in your ownership of digital assets. Excuse me. Okay, so our job every week is to simply provide the most valuable information in the world. We do that all the time. We've done that for well over a decade. Yeah, we're still here. You know, we're not beholden to anybody. We have complete financial independence. And hopefully that is something you're here to understand how to do. And you're not going to do it by staying as you are or simply giving up every 5 minutes. Okay. So the whole idea is to absorb the information, understand the big picture, which is why we do this call, and then apply that information. And it's not a one and done. It's never something that you just do once and hopefully, speculatively you've managed to succeed or win a lottery ticket. That's not what it is. You've got to literally set up and run a digital blockchain factory. That's the only way you're going to do it. So it's very, very important. Okay. And it takes time, it takes persistence, it takes fortitude, it takes resilience, it takes all the things you'd expect when you're setting up a business. So running in a retail space is where we find it very interesting. And in order to help that along, we've set up a very basic academy, right? Very basic academy, which does the job of helping the retail sector at the same time as other things that we do with regards to businesses. So we're not here to give you any financial advice, all right? We're not here to give you any advice at all. We're here to guide and show you some of the things we've done over the past decade in order to make the most of this burgeoning industry that is now becoming very normalized, which is quite extraordinary. Yeah. So we've been doing this a long time. Okay. We're proof of concept. We do all sorts of different things. Okay. That sometimes get people a little bit agitated because they don't go the way everybody wants, but nothing ever does. You've got to just make sure you're working through the process. So that's why we set the academy up to try and guide people in this process, because ultimately what this is about is quite simple. It's first of all understanding the difference between currency and money. And if you don't understand the difference between currency and money, don't even start this process because you'll never get it. You'll never have the ability to stay the course. So go back to the where to start section of the academy and just watch the content, understand the difference between currency and money. Once you've done that, it's easier for you to realize how, especially if you're earning less than $100,000 a year, or bringing that in terms of your income, it's easy to realize then why you need to be on the bottom part of this infographic. To simply try and mine fiat is what we call it these days. To simply mine fiat and expect that to be adequate enough for you to live the life that maybe you envisaged when you were younger, is the fundamental issue. Because people are simply trying their best to consistently buy liabilities with a devaluing technology. Yeah. Fiat technology, fiat currency is one of the most damaging effects of modern society that history has ever known. Yeah. And we just happen to have lived through that process. It's actually been going on since the beginning of the First World War. But for all sorts of reasons, it became a lot worse in the 70s. And people have stuck with it because whichever side you want to look at it on, they've either been dumbed down to not understand the difference, or they've been sold into a product, a technology that was always destined to keep people at best flatlining and at worst degenerative, very degenerative. Okay, so you might recognize that in your own life, and that's not necessarily an accident, and neither is it something you have to put up with. Because all you really need to do is to understand that by definition of the consistent printing of fiat currency, which when we started this process over a decade ago after 2008 for ourselves, it was like, oh, well, that can't be true. Surely they wouldn't do that. Surely the bosses, banks and governments wouldn't allow that to happen. Well, 15 years later, we're still trying to wake people up to the fact that you need to convert a proportion of your devaluing fiat currency only into assets. Because the crazy thing is, and it shouldn't be like this, but the crazy thing is that as they keep printing more devaluing fiat currency and debasing the purchasing power of that technology, it puts a positive net result onto the prices, not the value, but the prices of assets. And anybody who was taking steps to take personal responsibility for the accrual of assets in any shape or form over the past, even just the past decade, let alone the past 20, 30 years, is better off because of it. So why don't people take responsibility? Why do people keep earning fiat currency and then giving that fiat currency back to banks and pension companies and insurance companies and governments only to feel worse off every year? Why do they keep doing that? Well, you'll have to decide that for yourselves. But it doesn't take away the fact that there is and has been and is a solution coming even stronger than ever before. So you guys have got to decide. Now, as I say every week, excuse me, and I do repeat this every week because we have, lots of people listening on all sorts of different outlets. So the whole idea is to just to understand. It's not rocket science. It's really not rocket science. It's a case of simply being disciplined. And one of the major disciplines that is involved is the simple accrual of something called Bitcoin. And you can have all the conversations you want with your brother-in-law and all the conversations you want with anybody who's spent less than 1,000 hours actually studying what they're arguing about. But the facts are that since 2011, the asset in pricing terms of Bitcoin in dollar terms has accrued at 68% on average compound annual growth rate. It's just indisputable facts. So there's nothing more to talk about other than the fact that if you were doing that over the past decade, you are eminently better off. If you were doing it over the past 5 years, if you were doing it over the past 2 years, you are better off than you were otherwise. Now, this year is very interesting. We'll talk about that in a minute. But at the end of the day, understanding the fundamentals of the technology is the ultimate example of what we're talking about with regards to converting devaluing fiat into accretive assets. And it's nothing special other than the fact that a major part of that price discovery for assets such as Bitcoin and other fixed supply assets or limited supply assets is simply the fact that the asset itself isn't necessarily going up in value, but it will go up in price the more they keep printing more and more devaluing currency. In other words, it takes more dollars to acquire the same thing, which is the same for your house, it's the same for land, it's the same for your business, it's the same for your stock, it's the same for your pension, it's the same for everything, other than, ironically, your bank account, which by definition loses value year over year over year because the deflationary nature of fiat currency is 8 to 10% a year loss in purchasing power. And you should know what your so-called bank account is providing you in interest on any given dollars you've decided to give back to the system. That alone justifies why you need to own accretive assets. Now, many years ago, probably about 6 or 7 years ago now, we started to recognize something called stable coins as well. And understood early on their purpose, which has proven to be true and absolutely powerful insofar as we now, as people of the globe, can own directly US dollar equivalent value. That manifests itself as USDT or USDC at the moment. Okay, things are shifting, but that's where we are. Now, we also recognize that that's the case, that we can basically short the dollar, which we've done continually over and over and over and over again in terms of us being able to have that stable store of value. We don't stay in there long for all the reasons I've just described, but we do understand how to leverage, right? So we have taken that step many, 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 many times. And we've also gone to the extent of understanding how smart contracts come into that in terms of giving us direct interface, not just with the currency, but also with companies. So we don't have any middlemen. Yeah, we go straight to the company and we leverage the best we possibly can. Now, that's not easy. Okay, there's been a lot of learning, a lot of testing, a lot of trial and error when it comes to what's called decentralized finance. All right, now we're in the middle of that cycle, we're in the middle of that process, and the whole thing is set to provide us with what I call liquidity events. All right, and it's really not easy. Our job is to identify and research and go ahead and allocate to these smart contracts, and that's exactly what we've done. So that's USDT. Okay, it's not easy, but it provides us this holy grail, which is equity plus yield, right? You can't run a successful business, a long-term successful business, just off a balance sheet. You do have to have a P&L, right? You do have to have profits. So the whole idea is we operate as well within the stablecoin industry, and that's becoming even more interesting, as we'll talk about in a minute. And then if you're really good, if you really understand what you're doing, and you've totally focused on this concept that you are able to create ownership of technology, startups in many, many ways, in a lot of fintech, a lot of AI technologies these days, we are able to go forwards and start to take ownership of, let's say, more high risk digital assets, so things that are called altcoins or alternative to Bitcoin. And we go in there to own these select coins, and then we look to combine equity and yield in the same ecosystem. Okay, now this is proving to be a much more challenging and much slower process than we envisaged when we started this about 5 or 6 years ago. But notwithstanding, it's still there. While the companies exist, we have a duty of care to make sure that we help them to sustain and become successful, which is exactly what we do. Okay, so that's the business end of your factory. That's where a lot of people struggle, because a lot of people in the retail sector put the money in and they expect everything to be sorted out. They want basically to buy success, just like they think of this industry like a pension plan. It's not a pension plan. You've got to run the business, right? And we support that infrastructure through the academy. So that's the basic model. You design your own digital business plan. You decide where you want to be or don't want to be, where you want to stay or you don't want to stay, and you determine what your factory looks like. Okay, so we did an extensive webinar on this actually last week. You can access it through your Systems Plus subscription over in the forum, and we showed you basically how to create a business digital factory perpetually funding itself through the balance sheet. But I showed you that in detail, and all the tools and everything else that exists around the academy for you to be able to set that up. And that's especially important in times like this. Times like this being where you've got this transition going on in terms of Bitcoin ownership. And we've got this very special, very important window, just like we got back in 2020, just like we got back in 2016, and just like we got back in 2013. Got this very special window where we're able to convert much, much larger amounts of devaluing fiat currency to Bitcoin itself. Okay, we'll touch more on this shortly, but it's a very important time if you want to accelerate your balance sheet. Now, we know that's a lot to take on, and we know a lot of that might sound like, double Dutch to people who are just listening to this for the first time. So your job is to ascertain where you are in the cycle. And the cycle starts at mindset. You then go through skills. Yeah, again, that's where most people fall down, because just like going to the gym and getting fit, frankly, people just can't be bothered to get the necessary skills to be able to move forward professionally into systems management, which is systems stroke asset management at that point, because you're working with systems, you're working with assets, you've got to understand security and leverage and reallocation, and you've got to get good at cash flow forecasting and planning and organizing where you're up to with your footprint. You've got to know where you're going to be 6 to 12 months down the pike. You've always got to be thinking about your next steps. So that's the difference between success and failure, actually, between skills and systems. And when you've got that sorted out, then you can get into consistent income. And then you have to learn the really hard bit, which is the hardest bit of all, of how to protect your income, which is otherwise known as wealth. So we take people through the whole process, right? And that's a job. It's a job to do. You get to set up a business. Now, to make that easier and faster, this year, because of AI technology, we're now able to provide that at a very low cost of entry, because AI does it for us in many ways in terms of the AI coaches we now have. And that means we can help many, many more people than when we were just working as independent, individuals, trying to help as many people as we can. With AI, you can cover the globe quite easily. So we've got that now with the Wealth Builder series, and we'd encourage you to get started with this process as a skills subscriber and above. Now then, in terms of the big picture and where we're at, like I say, times like this just reminds me back in 2020, reminds me back in 2016, 2017. You get a lot of FUD, you get a lot of misinformation, you get a lot of the bears, right, coming in with all their reasoning. You get a lot of confusion. And it's interesting this year, because this year may well turn out to be actually one of the only years ever that we've flatlined across the whole 12-month cycle. As human beings, we tend to measure stuff in 12-month cycles, right? It's just the way it is. But this year will be very interesting. Now, we do expect a push towards the end of the year for all sorts of reasons we'll talk about in the macro. But it's interesting because it seems a lot of the OGs, people who have been involved, basically, I define them as people who have been involved with Bitcoin before 2015, but some people define OGs as people with more than 1,000 Bitcoin, whatever. They've taken a decision this past couple of quarters to obviously put themselves in more safe territory as they regard it. Now, we can't blame them for that. It's an interesting one, because the only way you've been able to survive in this space up until now is to take full sovereignty. And we would still absolutely endorse people taking full sovereignty of your Bitcoin and digital assets. In other words, have them on cold storage, off the system, and you managing that for yourself. But we fully understand that that is quite a responsibility, especially as Bitcoin went through $100,000 this year. It's become a big responsibility. Imagine owning, 500, 1,000, 10,000, 20,000 Bitcoin, and you're wholly responsible for that. Obviously, because people are going to pivot out as they recognized, which only happened this year, that now big institutional companies exist that are going to take all that traditional finance methodology and rules and regulations and legislation, and they're going to give you some element of protection, right? That's at least the perception. Now, those of us who are the maxis understand it. Well, I wouldn't trust, BlackRock as far as I can throw them. So there's no way they're getting any of our Bitcoin. Is that type of fraternity? But clearly there's a big, big number of people, which again, I can't blame them at all, who are looking for more of a stable lifestyle in terms of what now these assets are worth, especially Bitcoin. So we're going through that transition. It's happening right in front of our eyes. And it's happening much quicker than we anticipated, to be fair, right? We didn't necessarily see the OGs moving this quickly, but you can see it all on chain. You can see the big wallets. You can see where they're going. You can see which wallets they've moved to. So it's all there. You just have to go and study it. But at the end of the day, for us minnows, the people maybe not as quite as big as those guys, then we can see it and say, right, okay, well, that's fair enough. That's fair enough, because what that's done, as I've said now for months and months and months, you've moved across the Rubicon. So where we came from back here, when we were putting up with this type of up and down, 2016, 17, 2019, 20, 21, 22, there's nothing new here under the sun. Yeah. And nothing ever stopped us, ever. Nothing stopped us, because we understood very early on the need for sound money on digital rails. So nothing ever stopped us, and many people in the academy as well. Nothing ever stopped us. And this doesn't stop us either. This 25% pullback, I mean, there's been 3 or 4 of those in the past 18 months. There's nothing unusual about that. And every time we get a pullback, we kick on with higher highs. That's just the way Bitcoin works, and it always will. Yeah, it's just that it becomes bigger in dollar terms, which gives people some pause for thought. But it's okay. This is the opportunity you need, because down at 100,000, you need to be doubling down now as best you can to kick on for the next cycle. And the next cycle is profoundly different. The next cycle is, the previous cycles have predominantly been the retail people, the crypto guys, the entrepreneurs, the idealists, you know, those of us who pioneered this thing to where it is today. The next phases are very different, because that's all about big institutional, long-term holders who have this on balance sheet, even at country level. And there's not a cat in hell's chance that they're going to provide the ability for that to be devalued. In fact, it's impossible to do that with Bitcoin, because you've got this continual drive, okay, of less and less Bitcoin existing in real terms, and more people placing it on demand, under demand, not because of Bitcoin, but because of the concepts of sound money itself. So if you've not done enough reading and deep diving into what it means to move back to sound money principles, as we were back before the First World War, in terms of the gold standard, and then thousands of years before that, right? If you've not understood how many fiat currencies, over 170 of them have failed over the past 500 years, if you don't understand that, and you're sat thinking it's different this time, we're special, we're more sophisticated, it's 2025, it's never going to happen to us. If you're still falling for all the propaganda of the banks and the bosses and the media around how they're going to keep everything moving, central banks are more sophisticated, you know, it's all this, the IMF knows what they're doing. If you're still falling for that, then you're going to carry on getting what you've got, right? The bottom line is, it's the fundamentals of sound money that hold this whole thing up. And it's the slow adoption of that principle that we're able to slipstream as privateers off the back of this shift that's going on. Okay, now they won't make it easy for us. They will not make it easy for us, but it's never been easy. Why would it be easy? But as all we know, as of today, the 17th of November 2026, 95% of all Bitcoin that will ever be mined has just been mined today. 99% of all Bitcoin that will ever be mined will be mined by 2036. Yeah, about 19 odd million in circulation as of today, of the 21 million that will ever exist, and a good chunk of that has been lost, right? Or is in deep storage. So all the mathematics that sit around this are very profound. They have to be understood. And it's conviction, I'm afraid. It's conviction, it's fortitude, it's resilience, it's total knowledge, it's education. And it's looking back on yourself in 2 years, 5 years, 10 years, just like many of us look back on the last 2 years, 5 years, 10 years and go, blimey, I'm glad I did this. Because it does profoundly change the way you live your life. And that's really all we want, right? We want to protect purchasing power. Yeah, which is why it's amusing when you look at things. We've got some charts in the academy where you can have a look at inflation going backwards, back to 2010, inflation going forwards to 2035. You can track the price of a cup of coffee, the price of a pint of beer, the price of a loaf of bread, the price of a pint of milk, and then have a look at what that costs you in Bitcoin terms then, what it costs you in Bitcoin terms today. And those of you who own Bitcoin especially, you'll find the price of milk, your loaf of bread, your pint of beer, your cup of coffee is going down in terms of how much it costs you in real terms. Whereas if you manage that off the back of fiat, it's exponentially increasing. That's the fundamental difference. And from that, you can project out how much Bitcoin you're going to own next month, the next quarter, next year. Always own more Bitcoin next month than you own this month. Work on the trajectories. Yeah, you can only go off average CAGRs. We average around 30% now, knowing that that's not going to affect you every week, every month. Don't price watch. Don't get involved with all these peaks and troughs. Look at it over the time spans of a half a year. And then you realize just how easy it is actually to protect yourself from what people call cost of living crisis. If everyone understood their responsibility in owning sound money, there wouldn't be a cost of living crisis. Bosses, banks and governments are not going to fix this for you. You have to fix it for yourself. Now, here's why. So the macroeconomic and the geopolitical aspects that we do every week here are absolutely critical. I know people can turn off at this level. I know people don't want to listen. I know people would rather wait for the weekend and wait for 2 weeks holiday a year and wait for Christmas and hope everything's going to be all right with a pay rise and play the lottery. I fully understand people want bread and circus. But if you're really serious about being in control at the very least and working towards life-changing opportunity, especially for yourself and your children, then unfortunately you do have to go through this and you have to become a product of the product. When you do this, it also makes you see just how much you've been played and continue to be played. In fact, I'd argue you're being played more in 2025 than you even were in 2008, than you even were in 1991, than you even were in 1987, than you even were in 1979, than you even were in 1971. They're getting worse in terms of how they're playing the public. It's not improving, other than we have an opportunity for the first time in human history to improve it for ourselves. And that's what this is really about. So I'll whip through the macro and the geopolitical. As always, you can always watch this back if you go a bit quick, but at the end of the day, it's all about building up the structures and taking it all into perspective around the gift that we currently have to get ahead quicker if we understand how to maneuver fiat-mined currencies into sound money. Now, Square are doing a big part of this. Square with Jack Dorsey, 4 million Square merchants as of last week can now accept Bitcoin with no fees. At the moment, obviously it's a promotion to get everything moving and everything else, but Jack Dorsey's big on this. He wants to see Bitcoin as a transactable entity, not just a store of wealth, which is fair play. So as of last week, people now who use the Square merchant system can transact with Bitcoin with no fees. That's a lot of people getting exposure to it. Now, those of you on this call, hopefully, are too sophisticated to think about spending your Bitcoin directly. But what we do is, of course, like I said earlier on the other slide, you don't buy liabilities with Bitcoin, you fund liabilities with Bitcoin. You fund liabilities with your assets. Don't buy liabilities, right? Big difference. Vivek Ramaswamy's Strive, another 1,500 Bitcoin onto their reserves. That's a bit of a dark horse out there in the background there, okay? So make of that what you will. Brazil Central Bank just ordered all Bitcoin and crypto exchanges to implement proof of reserves. That's, again, more policy, more legislation, more regulation. It's all healthy. It's not a problem, right? The Bitcoin bros, the maxis, oh, no, we can't have this. We want to carry on like we were. You know, no. The world is now where it is. There has to be these organized approaches. We might not like it, but it doesn't mean we have to use these facilities, remember. We just have to know that it is net beneficial for this burgeoning age of digital assets. 36 billion, SoFi Bank just announced live on CNBC. I was watching this live actually on CNBC last week. They'll be launching a Bitcoin trading to all customers. That was as of last week. I think it was Wednesday. Okay, the first national bank in any country to offer Bitcoin directly. Right. So capitulation, bending the knee, call it what you want. They know they can't beat this thing, so now they're doing what they need to do. Now, we've got to be careful with them. I'll keep saying this because they will look to take over the show, right? So we're going to have to time it. Yeah, we're going to have to time it. You can see what's happening with the OGs. They're capitulating back to TradFi and basically living their lives. Fair play to them. Good luck to them. But there'll be another round of this going on, whereby we do have to keep an eye on making sure that this thing is not completely taken over and utterly disrupted by the TradFi, which I wouldn't put it past them, right? There's only one way you can save yourself from that, and that is be self-custody, right? But we'll decide what we want to do and when that time comes. Banking giant Western Union CEO, live on Bloomberg, another one, won't trust with the barge pole, Western Union. They'll provide crypto on and off ramps. They've had no choice but to capitulate because they just can't keep up. There's no way that their traditional services can ever keep up with digital rails, so they've capitulated as well, as of Visa. begins testing stablecoin payouts. Okay, now they know what they're doing, obviously. Visa, to be fair, have been involved with Bitcoin for many, many years. They've been involved with DeFi for many, many years. But now they're jumping on the wagon with USDC and piloting the US businesses to pay in fiat while recipients can choose to receive USDC. Now, they know where it's headed. As I'll get into the geopolitics, there's a whole ream of things going on with regards to the vagaries of the stable coins and where they fit. Same with Ripple, right? There's a whole ream of things going on over there that give us lots of pause for thought when it comes to trust, but we don't trust them anyway. So as long as we're observing what they're doing and it has a net beneficial effect on digital rails, which is a combination of blockchain plus AI, then we take advantage of it in any case. So that's all we're interested in. We can't compete with these people. We can't change it. It's going to happen anyway, whether we like it or not. And it's a whole concoction of different things between CBDCs, stable coins, and all the things going on in terms of offsetting and how people are going to try and perpetuate fiat, just like they did with decimalization 50 years ago. So we know what's going on. But at the same time, it all means we have to be observant and ready for it. Case in point, $13 trillion BlackRock now telling Hong Kong legislators there is a role for Bitcoin and it's growing very rapidly. So in other words, they've become suddenly a Bitcoin bro. Not suddenly, but they are now a Bitcoin bro, right? Which is crazy. Yeah. BlackRock, Bank of America, Fidelity, all those guys over the past 15 years had nothing good to say about the technology whatsoever. Now, all of a sudden, they see an opportunity to profit and take advantage. They're all over it. Yeah. We slipstream that. That's the best we can hope for. Our job is to get to enough Bitcoin as quick as we can so that we're not caught in the next rounds that are inevitably going to happen, whereby these people start to use it as a weapon against society. We know what they're like, okay? Our job is to ride up and be okay in our own households long before any of this starts to shift, which is well over a decade away yet, okay? But we'll see where we end up. Taiwan Central Bank officially to pilot strategic Bitcoin reserves, just another bending of the knee there. Central bank, central bank, central bank. Institution. You know, they're all making the beds. They're all absorbing all the OG sales. They're absorbing them all, buying it up, playing their own games as well. The market makers are playing games like crazy right now. It's shaking out all the last remnants of any, inexperienced retail people. There's very few retail people around anymore other than maybe, those of us who totally understand what's going on. The vast majority of the pump and dumpers and the get rich quickers have been well shaken out, especially those who've been buying up this last 12 months. Okay. The big guys know this and they're shaking everyone out. Then it'll start to go again on a new basis because obviously we needed to get rid of those $300,000, $5,000 Bitcoin owners. And now we're on a new buy base of over $100,000 Bitcoin owners. So it can only go one way. So we know all this. It's all being driven by the central banks and the institutions. 13th of November last week, Cash App now allows customers to pay over Bitcoin using USD balance, letting anyone pay in Bitcoin. So Cash App, along with Square, along with Stripe, along with MasterCard, along with Visa, along with all these payment rails now are suddenly opening up for us to be able to utilize the asset. Remember, you never sell the asset. You don't buy liabilities. Second page, 95% of Bitcoin supply now mined, as I said earlier. Okay, so 19,950,086 Bitcoin is now in existence on-chain. Obviously, how much of that is available is a different matter. Of the 21 million that will ever exist. If you ever get a little bit shaken out by this industry or you feel a little bit punch drunk with short-term price action, just read that sentence. That's really all you need to know. Yeah? Very, very powerful, very interesting, and we're in for a hell of a 10 years. Probably 5 years, actually, out to 2030. It's going to be quite extraordinary. You lived an amazing time, guys. Don't ever forget that. One of the most amazing times to be alive in human history. We're going to put Bitcoin on the balance sheet of every American business, one swipe at a time. This is the Winklevoss brothers. Okay, this was at the Amsterdam Bitcoin last week. Okay, they're up to all sorts of different things, the same as Coinbase. They're doing a little bit of capitulation back to the institutional level. They're obviously bent the knee for the US government. But overall, these are the big guys now that are making the world of digital finance normal, right? And that's all we really want from them guys. Whether we trust them, whether we use them, whether we want them is a different matter. But the fact is, with the Genius Act, with what's going on with the market acts and everything else, we're hopeful that's going to be happening before Christmas. or some say even before Thanksgiving, that we're going to see lots of momentum. That's part of the reason we're going to get another burst of energy before New Year, by the way. Well, activity on Bitcoin is heating up. So again, you talk about the OGs, you talk about the whales, okay? It's basically a movement from individual whales to institutional whales, right? So where this buying activity is coming from specifically, I would suggest it's coming from institutional whales. But the bottom line is, as a lot of these smaller owners get shaken out, which is always the case, the average Bitcoin long-term holders climb from 12,000 Bitcoin to 26,000 Bitcoin, okay? Large holders are rotating profits, not stampeding out of the market. Far from it. If you listen to the bears and the FUD and the Twitter feeds and all these bloody YouTubers, they'll frighten you to death. They just want clicks, right? They're just looking for clickbait. They just want to get you clicking on their links with sensationalist statements. The guys are full of crap, right? You need to look at the chain. You need to look at what's going on. Work with the bigger players. Work with the big guys, yeah? And you're working with, people who actually have been around long enough to have an opinion. I'm talking people who've been around for more than 10 years. Cardone Capital acquires $90 million worth of Bitcoin last week. I'm on chats these days with Gary Cardone and Grant Cardone and people. You can actually talk to them yourself, right? Which is what we tend to do. We try and work as high as we possibly can, like I say, up with these OG guys. And he actually confirmed that last week, because you get a lot of clickbait going on especially on Twitter, on Bitcoin X, but Gary did confirm that he actually did do that last week. In fact, just this weekend, he's also put in the world's largest Bitcoin and real estate deal the world has ever seen. Okay, so Gary Cardone in particular is very focused on this now, and he was basically orange pilled by his brother. We watched it happen through 2025 actually on the chats. Harvard increases Bitcoin exposure by 237%. Okay, they now hold over $442 million in Bitcoin ETFs. All right, so again, Harvard bending the knee. Stanford, Harvard, I've got a lot to answer for, certainly since the 70s, in terms of the crops of economists they brought into the world, all following Milton Friedman and all following all this stuff, right? It's ironic, don't you think, that despite them still teaching people the same dross in terms of how economics used to work, behind the scenes, these institutions are buying up the future. That tells you all you need to know as well. Yeah? What we need to do now is get more of the younger generations, which I think is happening, coming through, resisting what their grandparents and parents thought as the only way. Right? And that's what we've certainly represented. We've done our bit in that since 2014. Binance stablecoin inflows hit 7.3 billion, CryptoQuant reports. Inflows at levels not seen since December 2024, right before Bitcoin blasted from 67 to 108. So this is what I mean again. It's these little subtle things. You can have a look on CryptoQuant and see where we're at. We know Binance plays games. This is why, as I've said for years now, don't even think about trying to trade your way into profits, right? You're never gonna win as a retailer. Just don't even think about trying to be smart with trading shorts, longs, whatever. The Binance guys in particular will eat you alive. Okay? All you can do is DCA and work to find ways to yield in more, let's say, simple forms of owning smart contracts and owning companies that are looking to build up equity and yield in much smaller ways. Trading your way through this, forget it. Right? What you can do is observe what Binance and such are doing to show you where you need to be focused. Okay, but all the way it boils down to Bitcoin. Robert Kiyosaki, bless him, clocks right twice a day guy. Yeah, he's been moaning about and groaning about collapses for 40 years, this guy. I mean, he never stops talking about collapses. Never happened yet, but he knows in the background it's not about one big collapse. It's been about lots and lots and lots and lots of death by 1,000 cuts. About 5 years ago, he got into Bitcoin. He was always a gold bug. Fair play to him. You know, he was great when he was younger. Get into what he did back with Rich Dad Poor Dad. It gives you the basis you need to know, right? But yeah, he needs to be put out to pasture now, in my opinion. Bitcoin death cross form. Now people look at that and go, death cross. No, that's actually a bullish thing. Okay, the 50 moving average finally crossed below the 200 moving average, right? Now, people look at that and go, that doesn't sound good. But, previous cycles, which is all we can go off, Bitcoin dipping during and before that death cross, then rallies between 70 and 195% in the months later. That's exactly what's going to happen again. Yeah? It happened back in April. It happened back last November, etc. And then in short order. But it's happened time and time and time and time again as you go back. If you're going to look at the charts and if you're going to do join the dots for men, that's what they call it, the TA. If you're insisted on doing that, then that's one to watch in terms of it just happened actually yesterday, that crossover. So that's going to be interesting to keep an eye on as well. And last but not least, the geopolitical stuff. All right, again, it gets pretty heavy. And I could spend a whole session talking about this week, but I'm not going to. We'll just give you the headlines about where we're seeing this go now, because it is very clear there's absolutely no difference between red, blue, left, right, up, down, whatever you want to call it. They're all the same, right? They're all working through the process. We made a good example of it last week. It doesn't matter whether it's $2,000 stimulus checks with 50-year mortgages, which is what the reds, the blues, the right guys are bringing in, the conservatives are bringing in, or it doesn't matter whether it's the left saying they're going to give people more welfare checks and they're going to put on rent controls. It's the same thing. It boils down to them printing currency, period. Right? So it's not a case of waiting for a handout, right? As a 20-something going, oh, fantastic, my mortgages are going to go down in dollar terms every month because I'm extending the contract over 50 years and not 30. Fantastic. No, it's not. That's not what you want to be saying to yourself. It's not, oh, fantastic, I'm going to get a $2,000 stimmy check to buy more bread this month. That's not fantastic. Rent controls are not fantastic. Welfare, increases in welfare handouts are not fantastic. Far from it. They're only fantastic if you understand how to take advantage of them. So if you're cute enough to understand, which is what you should be teaching your kids, in my opinion, that, look, take the 50-year mortgage, but the difference between what you would have been paying on a 30-year compared to a 50-year, you better make sure that you push that difference into the accrual of sound money assets. If you get a $2,000 stimmy check thrown at you, you better make sure that you allocate that to sound money assets. If you get a fixed rent, which is obviously never going to work, never will work, and it's just crazy that people even fall for this. If you get a fixed rent arrangement in your city put down onto private landlords, and you get a benefit from that because your rent stops going up as much and you've got a fixture, you take the difference and you put that into sound money assets. That's the only way you can possibly escape the system. The only way. The fact of the matter is, and it shouldn't be like this, like I say every week, but it is, that as they bring in these vote policies, as they bring in this bread and circus, as they bring in this next thing that keeps people on the hook, it drives money printing or currency printing. And what do you think that does to the price of assets? So who do you think the real winners are? That's the crazy thing. It is that simple. And then you can go through all the list you want with any of these points. Bessent issuing new guidance giving crypto exchanges, ETPs, okay, ClearPass, the digital assets, and shows up their rewards to real investors. Fantastic. Okay, great. It's putting some muscle behind it all and we can see what it is. Senate committees to finally release the long-awaited draft of the crypto market structure bill. This is going to be the big one that hopefully comes before Thanksgiving is what we're looking for. The bill set to overhaul how Bitcoin crypto exchanges are regulated, expected to pass by year end, hopefully sooner than that. The banking hegemony continues to resist and manipulate against all that, by the way. Okay, they are fighting back against this. The banks I'm talking about, the hegemony, okay? And the lethargic masses, as I've just gone into there, will put up with whatever they're given. This is the problem. It's a lethargic issue and a lack of education issue more than it is what you'd maybe necessarily call a manipulation issue. If people just stop allowing themselves to be manipulated, by working basically into sound money, then the world would be a better place. Because as soon as you pull the oxygen away from the ability these people have to play, then things change. Okay, it's the lack of focus that we have in common society that's the big issue. Okay, it's no different in China, and it's no different in terms of the behavior. So China accusing the US last week of seizing and basically stealing 127,000 Bitcoin, okay, worth over $13 billion. State level hack, according to China, against the US. You wouldn't trust either of them. But this is just the fascinating observation we can now make about the hash wars that are going on, right? These are literal hash wars where governments are stealing off each other, right? And just causing issues. The more subtle hash wars are obviously behind the scenes when it comes to the big infrastructures, the power, all the stuff that goes along with mining these assets into existence, especially Bitcoin. So there's two things going on. Frankly, would we rather have hash wars than physical wars? Probably. But whether we like it or not, nations are going to fight, aren't they? Lazy, lethargic Britain. One of the MPs in the UK, Nigel Farage, okay, he's basically slipstreaming what he's observed going on with popularism over in the US, and he's looking to implant that front and center into the next political cycle. So it's so obvious, it's not funny. He's just basically copying what Trump's done. And therefore, he makes statements such as they're going to bring Bitcoin taxes under control and establish a strategic Bitcoin reserve. Well done, Sherlock. Right? You can't trust these people as far as you can chuck them. It doesn't really matter. They're putting the sentiment onto mainstream. They're putting the people into a fear position, which causes then seismic splits and shifts towards political sentiment. We've got till the midterms for this next cycle, okay, which will bring in the stimmy checks and bring in all these other things. And then we'll kick on again. There'll be more institutional adoption, there'll be more liquidity in the system, changes to the Fed, more interest rate reductions, more printing currency now, which has been going on since last weekend. And you're going to get Europe and the UK simply following that. Right? All of it leads to the same place, which is price discovery in hard asset money systems. Czech central bank 1 million Bitcoin into crypto last week, again announced at the Amsterdam Bitcoin show event. Interesting, the Czech, because they're not tied into the EU and that level, just like the UK aren't. So you'll find that the Brits and the Czechs and other countries will move more quickly along this road, especially as the grandmas in the European Union still scratch their heads about trying to maintain control, which they probably will end up getting because people are so damn lethargic. India now has its first Bitcoin-only investment fund. Again, India was so against crypto and blockchain, Bitcoin, over this past decade, and now they've capitulated. I mean, citizens of the world's most populous nation can now get Bitcoin without paying the 30% value tax. Okay, so that's quite interesting for those of you in India. The finance ministers of Luxembourg said their countries will also move on this. Again, Luxembourg has some element of independence, so it can move forwards. This is not an accident. Okay, these guys are just basically observing the benefits of what it is to move into this technology at pace, as are Kyrgyzstan. But these guys are different. Just like in Brunei, these guys have spotted the ability to actually build from the bottom upwards, which basically means mining the asset into existence by using not just redundant power, but also putting new minor power plants into their community and into their nation states, right? UK last week reported one of the first British-built nuclear power plants being put into South Wales. Whoopie-doo, right? Again, just copying the Trump model. We'll end up with these, as it should have been for decades already, smaller nuclear plants covering smaller areas. That should have been done decades ago by government policy, but obviously they don't know what they're doing. So the UK sold all their power plants to the French. So now they're starting to bring all this type of stuff in. Now, they're not stupid, obviously, and they're obviously watching what's going on in other parts of the world. I'd like to think at some point they see the sense in harvesting delayed power and lost power back into a asset such as Bitcoin. Why would you not do that? Why would you not do that? Third largest owner of Bitcoin on the planet is the UK. So we're doing everything we can. We'd encourage you to write to your MPs. I know it's like talking to the wall, but the more of us that write to our MPs and explain that this should be going on, especially when it comes to Bitcoin strategic reserves, the better the place will be more quickly. Last but not least, Japan's top financial regulators to cut Bitcoin and crypto taxes by 60% next year. Nation state sound money competition is building. On top of that, of course, the news recently now, this today actually, that Japan has just gone into now more overdrive when it comes to print, just in line with what the Fed have just started to do and just in line with what every other country, major country, will need to do very shortly. More liquidity in the system, more price discovery for Bitcoin. Simple as that. All right, so that's a lot to take on board. I appreciate that. Huge amounts of information. We break all this down every single week into workshops, podcasts, blogs, and workspaces. Your job is to take all this big picture thinking and align it to what you're going to do strategically this week in making sure your business is stronger this week than it was last week, right? So that's the second part of this call now, as we look at different ways that we prepare ourselves to refine our factories, keep our factories nice and organized on top of every machine and getting ourselves ready for these liquidity events and everything else that goes on in the cycles. Appreciate your time. See you on the next call.